you had it's like a recipe. You had the market really ripped through August, driven by stock splits at Apple and Tesla, which drove both of those stocks up, 30% and close to 70%. And, you cutting a pie into 8 pieces instead of 4 doesn't do that. So if you go back in history and look at stock splits, the stocks tend to have problems a couple of weeks after that. Also, getting a vaccine on November 1st, which we heard about on September 2nd, that was a big positive. And then hearing the Fed at Jackson Hole on August 27th saying basically they'll let inflation overshoot. Those were all positives, and it just drove the market to an overvalued level. And then yesterday, you actually had Sienna come out, and they were expected to beat and raise, and they cut their forecast by 17% for the upcoming October quarter. And they have, remember, July quarter end, so they had an extra month in there. And what they said was business, really slowed down in the month of July. It was across all geographies. It was across all customers, including the big internet service providers. And that made people really sit back and go, okay, well, maybe we got a little too optimistic. And quite honestly, it could have been anything that triggered that. But that was, to some extent, the trigger that helped, along with the dollar having bottomed, et cetera.
Should just mention the Dow briefly went positive there as you were talking, Dan. And to that point, in fact, how big a difference does it make in your mind as to where we go next that today we were down as much as 5% on the NASDAQ and have bounced quite significantly off those lows? Do you feel this moment is the major bursting of a bubble and we've got a long way to pull back, or that this was a brief, relatively significant pullback and people are going to buy this dip?
It's hard to tell. We have an hour left to go, right? We've seen the market go from, being down 3% to now up. Who knows where it's going to close? And people have a long weekend to think about how much exposure they have. And so I think it really comes down to stock picking. I mean, if I think about what we did in the first quarter of the year when the market was down 20%, we said, okay, these are the names we think will benefit. And, the market went down faster and quicker, the fastest to down 30% in history from an all-time record high. The bounce has also been the fastest in history as well. So what we're trying to do is stay out of that and focus on, well, where do we think there are names that have catalysts at the end of the year that, much like in the March quarter, right, there were some names that were up. What do we think that can be up in the fourth quarter where we don't really care if the market's up or down? And then valuations, they don't matter until they do. We had an interview, I think, a few weeks ago where I said, valuation is a terrible timing tool. But when the market sells off, people go and actually start looking at how expensive are things. And so we're trying to stick with stuff that we think is a lot cheaper relative to its growth rate. And that's where we get more excited. So we're actually buying more than we're selling today. Unfortunately, the market's ripped up a lot, so the prices aren't nearly as good as they were. But I think this is not the end of this, at least in my opinion. But, we'll see what happens.